please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. It's an insipid day of trade, at least at lunch hour at this point, because you cannot really say that markets are good or bad at this point. It's really flattish. Nifty has just about gone into the green, but we can't make much sense of that. We'll have to really see whether this momentum really continues. But advanced decline is giving some solace to the market, because even though most of the frontline indices have been in the red, it is advances are more than the declines. In fact, it has just crossed over some time back, and in fact, as I speak, Bank Nifty has also turned into the green. So yes, a flattish day of trade, but at this point it's looking much better than the first half of the day. In fact, in the last couple of hours, markets have become a little tad bit better, Mangla.
Insipid day is the word you used, Nisha. You know, remember tomorrow is Holi, so maybe market's giving you all the colors. It gave you green, it gave you red, and as we speak, absolutely flatline. In our graphics, it goes as blue.
They have only two options. So they gave us both.
Our graphics, when it's unchanged, it's blue. So that is something we'll have to keep an eye out on. But what I will be watching out for is there sort of recovery, short covering coming in the latter half of trade, primarily because of the fact that the bears did not take the markets much lower, and 3-day weekend, maybe, you know, people would want to unwind some positions and go home in the second half of trade. We'll get some auto sales numbers come by in a bit, but as we're taking a look at the Nifty Bank, its weekly options expiry, it's at 25,100. So the 25,000 put has seen a lot of writing, 20 lakh shares in open interest out there. That is something that the bulls believe they can defend, but the bears believe maybe 25,200 and 25,300 is something that is our mark. So we'll watch out for that. If in case we see some short covering, that would cause a further spike in the Nifty Bank, given the sort of call writing we've seen at 25,200 and 25,300. All
right, so flattish in our markets ahead of the long Holi weekend. And let's take a look at the global markets as well. Asian markets, they, like Nikkei as well as Taiwan, really closed in the red. However, Shanghai as well as Hang Seng bucked the trend by gaining in trade today. China's Caixin manufacturing data hit a 6-month high, and Japan's February final manufacturing PMI stands at 54.1 versus 54 on a month-on-month basis. European markets, they are seen lower ahead of more Fed comments really coming in. So keep an eye out on FOMC and the Fed commentary really coming in under the new Federal Reserve chairman.
All right, but let's get back to the domestic cues. Feb auto sales numbers are looking good so far for the company. Sonia joins in with all the details. Sonia, so far so good?
Yes, so far so good. And after a long time, we've seen growth across sectors. So, you know, it's been sort of secular in nature, the growth that we've seen. The best of the lot is coming from the tractor makers, but I'll come to that in a bit. First up, in the two-wheeler makers, we've had very good numbers coming from Bajaj Auto. A 30% growth is what the company has seen this time. Both exports and the domestic market has done quite well. And the management indicated to us that key export markets like Africa, Philippines, etc. are doing pretty well. The good numbers will continue next month as well. Escorts reported a fabulous set of numbers. 50% growth is what the company has seen in their tractor sales this time around, and the export numbers for Escorts have also picked up quite a bit. Come to the rest of the lot, you had names like Maruti that reported a 15% growth in line with what the street was estimating. There too, the export numbers have looked pretty good. So that's a trend that, you know, the company has seen in terms of good export numbers across the board. Apart from that, a whole host of others too reporting their numbers. You have, you know, Ashok Leyland that reported a very good set of numbers this time around. Medium and heavy commercial vehicles also grew quite well. And even Tata Motors, the numbers looking pretty good. In line with street estimates, it's really the commercial vehicle space that has been moving along with quite a bit of gusto.
That's right. Tata Motors LCV has grown 54%, MHCV has grown by 25%, passenger vehicles have also grown by 45%, though the overall scheme of things for Tata Motors, the domestic business contributes just about 10% to their top line and EBITDA. But we also spoke to S. Ravi Kumar, the President of Business Development of Bajaj Auto, on their business outlook. Going ahead, listen into what he had to say.
For the second month running, it is 3,50,000 plus type of a number that we have reported. And I think in March also we should certainly cross that 350 plus, and that's what I would say right now. I mean, for the last few months when we are talking, we are telling you that 145 to 150 range is what we will deliver. that is happening very nicely. Almost all the markets, Africa has done very nicely. Bangladesh has done. Nepal is doing well. Philippines is doing well. New markets are adding good numbers.
All right, first day of March, it's turning out to be a good month, or at least last month, as far as sales for autos are concerned, and that's why most of the auto counters are in the green. Let's get you some market opinion then going on the street, and we spoke to Teresa Baja of Kartika Capital about how she views the Indian market in its current form, and she says that there is a concern about Indian exchanges really cutting off their trading data to SGX.
Value in the Indian stock market has always been a very difficult term to define. As you know, India has always traded more expensive than any other market. But yes, with the U.S. down less than 4% and the MSCI EM down 4.25%, but India down 5.25%, it was a bad showing. I was extraordinarily concerned about the MSCI kerfuffle. It looked really bad from a foreigner's point of view. When you've got these three stock exchanges that are very rivalrous and very much contending with each other at home, all go to Singapore and say, oh, we're not going to give you trading data. And then it turns out it's in order to move their trades to a new exchange in Gujarat. It sounds like the state minister made them do that. So it really doesn't look good at all. And if there's a threat of India coming out of MSCI altogether, that is the end of the world. It's time to look at the export names. We've liked the Indian domestic story much better than the export story because the internal market is so big, and also the premiumization has been such a strong story along with formalization. So we're not ready to make that shift yet.
All right, let's take a short break. Come back, we'll talk about Fortis Healthcare. They held a conference call just a while ago. We'll get you the key takeaways when we return. Stay. Welcome back. Flatlining for all the frontline indices, but a lot of the individual stocks, they're buzzing as we speak. HCL Tech should come up for you from the frontline indices. The IT stock, some bit of recovery seen there. HCL Tech is the one which is leading the pack, closer to the higher end of today's trading range. Not a big weight on the index, so not reflecting in the kind of moves that we're seeing on the Nifty, but that stock is doing its bit of batting. From the broader markets, we have Shankara Build Pro. That one should come up for you. That one's moved to the high point of the day. Remember the stock listing around the same time as D-Mart for an issue price of 460, moved all the way up to 2200. Then saw a bit of correction in January and February, some bit of buying seen there again at the high point. And the third one is Dalmia Bharat. That one should come up for you. Also trading very close to the high point of today's trading session, up 5%, given a booster by CLSA's initiating coverage on the company with a target of 3,500. They expect a 50% EPS growth on this company. But talking about growth, well, one person or one company, there's no doubt about their growth plans, how aggressive they are. And this is Baba Ramdev, where Patanjali Ayurveda is now eyeing a larger slice of their export pie. Now, we learn from sources that the company is working on introducing more products, ramping up exposure to newer markets to grow export revenues to 3,000 crore rupees by 2019. Priya Sheth has this exclusive. Priya, 3,000 crores from exports. Anything stopping this growth engine?
Well, absolutely. In fact, Patanjali Ayurveda is working on a large-scale export strategy. In fact, what we do understand from our sources is that the company currently earns a revenue from exports to the tune of about 400 to 500 crore rupees. And this, the company plans to scale up to about 3,000 crore rupees by 2019. In fact, what we also do understand that the company is working on a large-scale strategy to grow their distribution network as well as the supply chain in international markets. We also understand that the company is working on a differentiated packaging and labeling strategy for global markets so that they can adhere to international norms. Sources also tell us that about 12 categories of products are exported as of now from the brand of Patanjali, and this the company plans to scale up in a phase-wise manner across several markets. Now, the key markets that Patanjali is targeting at this point in time include the Middle East, Africa, New Zealand, Australia, as well as US and Canada. And apart from this, the company is also looking at making the products more affordable in international international markets by setting up their own offshore manufacturing facilities. Now, they do already have a manufacturing facility in Nepal, and this they're going to expand to countries like Bangladesh as well as Africa. So this is a space that we will continue to keep an eye out for, but we also did reach out to Patanjali on this, and the company has said that it is focusing on growing exports in several countries.
All right, Priya, thanks so much for getting us all the details coming in on Patanjali. In fact, let's shift focus to some news developments in New Delhi then. And Cabinet is holding a meeting later today, and some key areas would be discussed, like it could be Fugitive Economic Offenders Bill. My colleague Rituparna Bhuyan has been tracking all those details very closely. Joins us on the phone line with what's on the agenda. Ritu.
Well, this is a special cabinet meeting which has been convened, and we understand that one of the items on the agenda is a National Financial Reporting Authority, which is mandated by the Companies Act. The authority was yet to be notified, and the cabinet will consider this. This authority is important because it will be not only be prescribing standards for accounting issues, but also enforce many of the provisions, which includes penalizing auditors for any issues that crop up. And in addition to that, the cabinet will also consider the Fugitive Economic Offenders Bill. This bill was put up for public discussion last year, and the government wants to take it forward and introduce it in this session of the Parliament itself. The bill is likely to be cleared this evening. The cabinet meeting starts at 4. This bill basically, seeks to confiscate properties of economic offenders who have gone out of India. Now, as far as the fine print of this bill is concerned, finally what gets approved by the cabinet and issues like threshold, etc., those details we will get to know in the evening once the cabinet clears it. With that.
All right, Rituparna, thanks a lot for that. We'll keep an eye out on that story. But what we need to watch out for is that we need to brace ourselves for the heat, as the Met Department has forecast a blazing summer, no less, across North India. Here's the word coming in from DS Pai, the Director, Long Range Forecast at India Met Department, on this development. Listen in.
As per the forecast release, we expect that during the pre-monsoon, that is March to May, the average normal temperatures over meteorological subdivisions, over most of the subdivisions over the country, likely to be in the positive side, that is above normal. However, seasonal average temperature over many subdivisions from northwest and neighboring central India, they are likely to be slightly more than 1 degree. So as a whole, during these 3 months, we expect above normal heat wave conditions over a core heat wave monsoon region, that is particularly northwest and central India, Andhra Pradesh in the south, etc.
All right, and Nifty 50 in the green and flirting with the 10,500 level. With that, we'll slip into a short breather on Business Lunch. We'll leave you with some market opinion coming in from Manish Sonali of Motilal Oswal AMC on his sectoral bets in the present markets. Take a look.
The news flow surrounding PSU banks are bad, and obviously these are not going to outperform. My understanding is there are a lot more skeletons that are going to come out of the PSU stable over the next 6-12 months. So that space is clearly avoidable. So the easiest part of the, if you want to play on financials, I would tend to believe is avoiding the PSU names totally. I think 2-3 hated sectors in the markets are going to perform well, which is the pharmaceutical space, which is the IT space, and which is the consumer space. There is value, not only in the tractor space, but also in the CV space, speaking to the CV guys, etc., the financiers as well as the manufacturers. The outlook is quite good, given that replacement demand is picking up, and the outlook even for, let's say, FY19, the first half, we are looking at, let's say, high single digits or low double digits sort of a volume growth, which should be in sweet spot, I would think. So.
All right, markets have been trading in a lower range this last few hours, and right now it's Nifty 50 which has reconquered that 10,500 level, and rest of the indices like Sensex as well as Bank Nifty, they are also in the green. It's only the mid caps which are on the flattish line. Mid cap index is still in the red, but take a look at the contribution as well, and some of the counters which have gained in the last hour of trade and adding some bit of support for Nifty 50 to really stay at that 10,500 level has been from the auto sector like Tata Motors, IndusInd Bank, ONGC, Vedanta, HCL Tech, Yes Bank, all of them have gained in the last hour of trade or so. Take a look at advance decline. Also, it is favoring the advances. In the last few hours of trade, it has crisscrossed in the favor of the green, and some of the counters are really recovering at this point, both kissing each other in terms of advance decline, but still advances are showing 1354 to declines of 1154 at this point.
A lot of mid caps, they're spiking as we speak. You know, Reliance Communications is the one that should come up for you. A sharp spike seen there. Apart from that, we have Torrent Pharma. Remember that stock opening, Torrent Power rather. Remember that stock opening in the red and now moved to the green. And we have all these stocks which are moving. But Archana Shukla, our colleague, is in conversation with Umang Vora, the MD and global CEO of Cipla. Let's cut across.
The helm of this new journey is Umang Vora, Managing Director and Chief Executive Officer of the company. And today he joins us here on CNBC TV18 to help us understand how much of that journey has he completed. Thank you, Umang, for sparing time for CNBC TV18. First up, it's been almost 2 years that you've joined. A lot of changes in Cipla, a lot of work, a lot of consolidation that you've done in the business. What, on operational side, what are the changes that we are now seeing in terms of, the results of this consolidation?
So thank you. I think your introduction right at the beginning was better than the question that you asked me, but I'm gonna try and take a stab at it. I think operationally our teams have rallied around try to improve the outcomes we have in some of our key markets. And we'll start with patient outcomes, whether it's in India or it's in South Africa, in the US, some of our emerging markets. We've actually taken a lot of initiative to reach out to patients digitally, otherwise through the doctors. And I think all of that is coming to bear. So this is our customer reaching activity. We've done a lot on costs. Our CFO, Kedar, is a ruthless cost champion. He keeps going after costs that we can find. And I think the results of that we're seeing in our numbers as we're beginning to see them over the last, I would say, 18 months or so. There's a lot of work that still needs to be done. And I think the teams are working excessively hard. These are not just cost-cutting measures, but they are measures that remove complexity in our business. Complexity is a measure of costs. Eventually leads to costs. So we cut markets, we look at supply chains, we look at alternate ways in which we could sell products, buy products, and all of that has been work that's ongoing. We've made, I think, a couple of definitive shifts. We've taken bio, and we've restructured that business quite a bit. Europe was pretty much restructured. So all of that, I would like to believe, is behind us. And I think we've positioned our company now at a certain platform. From here, at a certain platform with a certain operating metric, we've been guiding towards 18 to 20% EBITDA. And now when we look back, we find it difficult to believe that we were not even there a few years back. So I think we're on track. I'm a little concerned about our revenue and how well we could grow them, which means what are we bringing to patients which is new, exciting, and important for them to have, either from a wellness perspective or from curing a certain condition. So I think that's the path we're in.
Yeah, that brings me to my next question, which was on the revenue front. A lot of this consolidation has meant that there is not so much sustainability as far as revenues is concerned. And when we speak to a lot of investors, this is one concern that they have. While they feel that, with all the headwinds in the US market, you are still, somewhere better off compared to the other competitors. But as far as revenue picture is concerned, doesn't look that great. Yeah.
So revenue is a challenge. I think it's not just a challenge only for the players with big businesses in the US. It's a challenge even for us. and I think there are a couple of reasons for it. We have to factor in disruptions, right? So I was at a meeting recently and I told my team that, look, a quarter in a year, something or the other will happen, right? So last year we had demonetization, so talking India, just India. This year you had GST, and in reform-oriented environments and governments, businesses have to adapt to these type of situations. So we're adapting to that, but that basically means a quarter gets disrupted of your growth cycle. And India is a sizable market for us. The emerging side of the world, you have volatility and things like that, right? But I'd like to believe in our core markets. If we look at India, we look at US, we look at South Africa, and some of the large emerging markets, I think our growth story is intact. We've even grown Europe this year. So I'm of the opinion that I'm not unduly concerned about growth trajectories within our core markets.
But a lot of your core markets have also changed over years. Earlier Africa used to be one of your biggest businesses, and now you're focusing more on US, and not to say that not focusing on Africa, but then there are other markets that are taking priority over what it used to be earlier, and that in turn is impacting and obviously putting a lot of question mark in terms of sustainability. Yeah,
and I think that's a portfolio. It's an overall organizational portfolio question that you raised, and you're right. We've retooled. We're now back to the US as a focus area. It's the largest market in the world. And because of that, we've had to cut markets as well. So emerging markets is, the bigger markets in that get the attention. The smaller markets don't get as much attention from a business perspective. Now we're trying to correct this, right? I don't think we'd like to be in a market where we can't sustainably supply medicines. But at the same time, I think what Cipla is looking to do is a little beyond this, right? Cipla is saying the generic business will continue the way it is. It's going to be predicated on patent expiries. It's going to be predicated on volume growth in India and the other markets. But I think what's more important for us to do is to begin to figure out how we can solve needs of customers, needs of our patients. What are those unmet needs, right? Why does a family... the hope that we see with families, what do they want as treatment options? And it may not just be products or drugs.
That has anyways been the core of Cipla for decades together.
Yes. So we have to do more of it, right? Because we were doing, for a while, we were doing a lot in HIV. I now think that we will be doing a lot more on respiratory, right? I now think that we'll be doing a lot more in the area of CNS in the US.
All right, that was big exclusive commentary coming in from the management of Cipla. But meanwhile, we also got in the sales numbers coming in from M&M. The good point out there, 36% growth in tractor sales, 39% in domestic tractor sales, and the stock had the high point of the day. Overall sales up 19%. We were working with 14.8%. With that, it's a wrap on Business Lunch. Stay tuned to CNBC TV18. Midcap Radar comes up next.